last time we did 1 minute pitch, which was basically like your elevator speech, right? If you meet anybody, you don't know who they are exactly. You might know, you might not. You might be at a conference. You might just be in an elevator. What are you going to say to introduce yourself? The 10-minute pitch is a little bit different because obviously lengthwise it's 10 times longer, but also different because generally if you're spending 10 minutes talking to somebody, you probably know exactly who they are. It's probably like agreed upon meeting. So what is a 10-minute pitch? In general, it's usually when you've gotten a meeting with an interested investor, right? You message them on LinkedIn, you gave them your elevator pitch and they loved it and they want to meet with you, or maybe a thorough pitch competition like the one we saw earlier today, right? Generally they give 10 minutes. There was a competition earlier today with Startup Nevada, and they gave 10 minutes because the cash prize was really big. It was $400,000. If you go to a 25K pitch competition, it might be a minute pitch, 2-minute pitch. They spend a little bit more time when they want something a little bit more thorough. So obviously also a good time to have that 10-minute pitch. In both cases, we're going to be talking about investors. Like obviously there's sales pitches. We're not going to cover that at all today. This is strictly for asking for capital. And so in both cases, whether you're pitching to an investor in a meeting or whether you're giving a pitch competition, you're asking for capital. And so that's a very specific ask, right? And this type of ask is usually accompanied by a deck that you'll walk through, right? So those are the two things we'll cover today in terms of a 10-minute pitch. So I showed you guys this investor pitch framework last time for the 1-minute pitch. I modified it slightly for the 10-minute pitch, but it's basically the same framework, right? You can use this framework for any type of setting in which you want to convince somebody of something very particular. So again, I'll go over really quickly because we talked about this a lot last time. Today, we'll dive deeper into every single piece of this. One is who's your audience? Who are you going to be pitching to, right? Is it investors? Is it clients? Are they VCs? Are they angels? Today it was an angel group, right? It was like 48 angel investors. So you know they're individuals and they also were learning about angel investing. So if you were in that type of situation, you know that these are not experienced angel investors. That's a very particular type of person, right? And so you would make sure that you understand that audience and that demographic. Two is what do they value? That's really important because if you think about a venture capitalist, they want 10x returns. If you think about a government agency, maybe they just want jobs in their city. The pitch is going to be completely different based on their values and what they care about. And so you understanding that audience and what they really, really care about is going to make it so easy for you to understand what different points to pitch. Similar to what we talked about last time, even though you have 10 minutes, I know this company is your baby. I know you guys love talking about it, but you can't mention every single detail. And so it's important to understand like what are the different things, what are the different levers you have to pull to get somebody engaged in your conversation. Third step is positioning. So now that we know what they care about, how do we target it in the correct way? What resonates with this type of person? How do they like to absorb information? Do they like visual? Do they like verbal? Do they like a comedy show? Like whatever it is that they like, you're gonna have to pitch that style. Fourth, most important, practice. Like this needs to be clockwork to you, right? And your 10-minute pitch shouldn't be memorized. Obviously, it's probably hard to memorize a 10-minute pitch, but it should be where you know every single bullet point and what's coming next. And you should know facts to back it up, right? Where if anybody asks you questions, you know everything about it. So practice makes perfect. Find another founder that's doing the same thing and practice with them. Find different people. I think last time I told you guys about the grandma test. Go to your grandma, pitch it to your grandma, pitch it to somebody that knows nothing about your industry. Your kids, your cousin, whatever, somebody that has no idea, and pitch it to them. And if they can understand it clearly in the first go around without asking too many detailed questions, you've done a great job. And last, improve, right? You're probably going to have a ton of investor meetings. I think the data point now is not to scare you guys, but the data point now is the average founder pitches to about 150 investors, right? And that includes like, yeah, I know, I know. And you always hear these stories like Jeff Bezos says that he had to pitch to 150 investors, which was rare back then because I think there was only 150 investors. Jokes. But they go through the grind and you never know what your experience will be. You could be that one lucky founder. We always hear those stories of like, they did their first pitch competition and they got it. And they did the second one and they got it. And that's it. They raised $2 million. That's great. I hope that happens to you guys. I really do. But if it doesn't, there is this potential that, you have to pitch to hundreds of people. And so it shouldn't be the same pitch, right? It should evolve. You should get feedback. You should hear what people are not understanding, what they think the risks are, and you should make it more clear and figure out how to explain your risks in a way that is absorbable and understandable. We'll go over risks a little bit later because I have a section on that. But this is really the same framework that we talked about, right? So know your audience, the value, the positioning, practice, and improve from there. So if we go a little bit deeper into this, especially because this deck in particular, last time we were saying maybe it could be sales or whatever, because we're talking about strictly investor pitches this time, I want to dive a little bit deeper and give you guys a little bit more frame of reference because I know you guys are really early and the majority of you probably haven't pitched to any investors yet. So a reminder, my background is in venture capital and I also worked in an accelerator. And so I've done the smaller investments, $50,000, $100,000 all the way up to $1 million. So this is what I've seen is the most common types of investors you guys are gonna encounter. You might encounter different ones, but this would be like 95%. So this is what we'll cover. Number one, that people never think about, and that is a huge opportunity for you, is your own friends and family. That used to be a thing that I don't really hear anymore. Back like 5-10 years ago when people fundraised, they would say, oh, my first round, my friends and family round, I raised $20,000. People don't say that anymore because they straight go to the 100,000. I guess inflation, but friends and family rounds are a really big deal. And also legally, they mean something different. So they don't have to be accredited if they're your friends and family, right? Because when you guys go out to fundraise, they have to be accredited, which means they either have 5 million in assets or over 300,000 income a year, something like that. Whereas your friends and family don't. So if your friends and family want to come together and do a round and you get like 50 of them and each one puts in like 100, 500, $1,000, that could be a little round to get you your prototype going, get you some marketing materials, get you some traveling expenses so you can meet other investors. So this round is really, really cool because of those regulatory reasons. And also they know you, they love you, hopefully. Hopefully they like you a lot. And these people may not be the most sophisticated investors. They may not need a lot of the work that you're going to put in for other investors, right? They may not want you to stand up like I am right now and do a formal presentation in your living room to all your cousins. They may just want to know, hey, are you serious about this? Like, I'm giving you money. This is serious for me. Are you serious about this business? And what does it look like for me to exit? Because again, might not be the most sophisticated investors. So for these folks, you probably don't need anything other than a conversation over dinner, right? Go to them, let them know you're serious about this project. I am also very serious about friends and family around, like, do not take money unless you're 100% sure this is the thing you're gonna do. Because if it's not successful, you're probably not gonna get another check from them. Unless you have rich family, in which case, just raise from your family. And so completely different demographic. I don't have to go into it anymore because you know your friends and family best, how to pitch them. Just let them know that you're serious, and that how much you want and what valuation it is, and try to break it down to them in layman's terms, right? They probably won't understand like a safe or a post money, pre-money, or convertible note, but you can tell them, hey, you'll get this percentage and this is how it works. And maybe some of them want to be angel investors, so this is you'll be their first check and it'll be someone they trust. So that's the first type that traditionally a lot of founders used to go after. I don't see it anymore, but it is a really good source of capital if the funds are available to your friends and family and they want to invest in you. Two, which people talk a lot about these days, are angels or family offices. So for example, if anyone that was at the StartUpNV event earlier today, it was a group of angels. It was 48 individuals that all put $5,000. And then I can't do math, but they gave out 300,000 today. So I think that makes sense. So angel groups tend to do that, right? There's individual angels. So these are high net worth individuals, people that just have some cash sitting around and they like to make high risk investments. Chances are these people have already invested in every other asset and they want something a little bit riskier. They have money to spend, right? Why not invest in AI or some new technology or something cool happening in the community? They could be independent. They could be in an angel group. That's what we saw earlier today at the pitch, which is when they all get together and they make the decision together. So that hedges the risk for them. And then the third is family offices. Family offices can range in size. There can be the really small family offices, few million, all the way to like the $1 billion families. We probably all know their names in different cities. These folks have the expendable income. So it's not so much convincing them this is the thing you want to do. It's more convincing them. It's a little bit more sophisticated, right? So here you have to go into a little bit of the market, explaining it to them. They might have a thesis. So they might have a very strict thesis on like, I only invest in female founded companies in Vegas that do biotech. I don't know. Some of them are very specific like that. And some of them are not. Some of them are like, you know what? We've already invested. Our family has a lot of real estate properties and we have stocks. We want something very different. So pitch us your idea and they might be open to it. You have to find out based on each individual. And again, they vary in sophistication. So they could be unsophisticated, you know, just have a few million and have never done angel investing, or they could be extremely sophisticated and have a process that they want to run you through. Either way, you figure it out as you meet them, but a really good source of capital because it tends to be faster and it tends to be cheaper. So like they take a lower percentage than traditional VCs. Third option, which is a really great option in Vegas, which is why I love talking about it, is government. So I think StartUpNV today, the pitch competition, whatever they invested from the angel group, the government matched 1-for-1. So the first place winner got $200,000 and the government's matching another $200,000. That person got $400,000 for a really cool company. They do prosthetics. I loved it. So sure, they do that for angel groups, but they also have grants. So I think Startup Nevada is very familiar with a lot of the grants that are available for individuals. If you're a nonprofit, if you are any sort of social justice or social cause, or you just are going to add a lot of jobs to Vegas, a lot of times those grants will be applicable. So I definitely recommend looking there. Most grants are equity free, and I love me some equity free. Do I admit everyone if I see them?
Yeah.
Equity free. Yeah, so they don't take any equity from you. They're just cash. So it's the cheapest type of money you're ever going to get. Now, I will say this, a little caveat. They do require a lot of fund administration. So if you get the grant, they want you to report on it. So like I worked for a company that was helping folks get out of debt. And we had like 3 of those. And every month I was the person in charge of collecting all the data. And it's very specific data. Tell us the distribution of every single consumer that you've helped, what state they're in. And we had like hundreds of thousands of people on our platform. So you have to like pull queries. Anyways, still cheap money, right? I still would rather do that than give somebody 10% of my company. So government, great option. And with government, we know what they like, depending on what part of the government you're going to, they generally will tell you on their website what they're interested in. They'll say, oh, we're looking for companies that are going to bring jobs to Vegas, or we're looking for companies that are going to promote this type of thing or help people in this community. So that's super helpful for you in catering their pitch, usually an application for the grant. But then also governments also sometimes have investing arms. Those will take equity, but generally they're economic development focused. So they do want the jobs. So they'll take a smaller percentage than another investor. Lastly, accelerators and venture capital funds. Sometimes people split these up. They think of accelerators as separate than venture capital funds, but I find that like the majority of accelerators today tend to be venture capital funds as well. So I kind of bucketed them together because they tend to invest in very similar spaces. They tend to look for similar returns. Although obviously if they're giving you a smaller check, you don't have to be a unicorn. You still can get a pretty good return if somebody has a mid-sized company. So slightly different, but I bucket them together because they're giving you cash, they're taking equity for sure, and they're generally giving you resources. This is the one group that is gonna help your development the most. Yeah, I think that's a generalization, but like 80, 85, 90% of the time, that is the case. And the reason for that is because they can introduce you to customers. They're very well connected. They can introduce you to other investors. They can give you resources from all the companies they invested in. When I worked at a venture capital fund, we had invested in 300 companies. So, and in a very specific type of company. So if you came to us and said, I'm having this problem, we're like, actually, we know 16 other companies that went through the exact same thing. You want to talk to any of them? So having that sort of like resources and that mentorship and that guidance and yeah, all of that available to you is really, really great. But that's how they are able to take a larger stake in the company, right? So generally, they're going to be the most expensive type of investment that you get. And when I say expensive, I mean they're taking money away from you when you exit, right? Because you're giving exactly very Shark Tanky, yeah. That's what they call VCs, right? Sharks. So it's traditional source of capital. I feel like everybody only talks about this group, and I really think it's important for you to leverage all the different things available to you, because venture capital funding might not make sense for everybody. They want something very particular, right? They want 10x returns. They want like decacorn. They want you to be a $10 billion company, and they're going to push you until you make it, right? They're not going to let you exit if they have a board seat. I feel like I'm going into too much, but I'm scaring you guys. But you know, they're not all like that. I was a nice VC. Okay, we kind of covered this a little bit right now because I ramble, but here's what all of them value, right? We talked about friends and family. They generally want to support you. A lot of times, like your friends and family might just give you the cash without asking any questions, right? Because they love you, they care about you, they want to support you. Be responsible. Make sure you give them all the information. Make sure you get their signature. Make it formal. Because I have seen cases where people take money from their siblings or their parents or whatever, and then something happens and they want the money back. And it's like, no, that's not how it works, right? This is not a liquid asset. Like you cannot just sell a stock to somebody else. It's not on the public markets. So make sure you have those hard conversations up front, even if they're throwing the money at you, because, you know, family dynamics, you don't want that to come up later on. Angels and family offices. These groups can vary based on experience. I already mentioned this. They may just be interested in your industry. So for example, I have a really good example. There is a family office in Tulsa, and they're called like a 10-toe capital. And they're like George Kaiser Foundation, right? And it's the family that runs it. And they'll give founders $1 million, but the stipulation is you move to Tulsa. You build your company there. You know? Not a bad deal, I think, but you know, some people have roots in other places, so they can't. But for them, their whole thing is making Tulsa a tech hub. So they go all over the world giving this offer. Move to Tulsa, I'll give you $1 million. And so for them, you know, I mean, they still do due diligence, right? You can't just be you know, fraudulent. But that's their biggest thing. They say that right up front. You come to Tulsa or no, right? Let's have a conversation. And so with a lot of family offices, they can be, you know, wanting to build up their city. Maybe they care a lot, like generally they're foundations, right? And so foundations generally like have some sort of social impact aspect to it. So maybe they're looking for more green industry or whatever. Check out their website. They usually have their values on there, and whatever their values are, make sure your pitch is pivoted to that point of view so that it makes more sense for them. Again, some angels are very like new to it. You might not know anything about them. I would still check their LinkedIn if they're an individual, just see what industries they've worked in, what their experience is. Because another thing is like, you shouldn't be adding too much money on your cap table that isn't adding too much in resources to you, right? Like if an angel joins, you want to also have them on your board, or you want to have them as an advisor. You're like, okay, what do you know about debt? Or what do you know about female hygiene products, right? I want to know what you're going to bring to the table apart from just your money. Most governments, I think, just want to see jobs. Honestly, this is the one I'm most unfamiliar with. So you should talk to somebody that knows about grants. But I think they just want economic development, right? Like it sounds like most of them just want you to move to their city and make jobs happen, bring prosperity. I don't know. And pay taxes, except there's no taxes here. Yeah, I don't know. They probably want jobs. Talk to somebody that does know about governments. I'm sure it's great. I think it's great because it's zero. You know, a lot of times it's free money. Last, accelerators and venture capitalists. We can talk about this for hours, and I feel like every time I give a talk or a presentation, oh, I forgot there's a camera here. I should be looking there too. Hi, guys. Venture capitalists, we can talk about this for hours. Every time I give a presentation, people ask so many questions because it's like, I feel like it's like the sexy headlines you always hear. This company raised $500 million, and everybody wants that. But I don't think it's for everybody. And maybe I'll give a short, like 2-minute thing on venture capital funds. This is my spiel. Historically, venture capitalists were founders that exited for a lot of money, right? So the first venture capitalists were people that exited for millions and millions of dollars. 10 million, that was a lot back then. And you know, whatever, let's say they exit and every founder exits with 50 to 100 million, right? All of a sudden they're like, what do I do with those money, right? So sure, you're gonna buy a nice house and you're gonna like buy a few Ferraris or whatever they do with it, move to Puerto Rico. The rest of the money, what do they do with it? So they used to come together and say, hey, we all exited these companies. We have all this cash laying around. We know a lot about technology and we've built companies that have exited for a ton of money. Let's reinvest because we're smart. We know these industries. We can advise the founders and our money can grow. And so that is historically how it came to be. Now there's fund managers that have never exited or don't have that experience. And so there's a wide variety of like the different types of venture capitalists. But the one thing they have in common is the returns that they expect, right? And so I say this a lot to a lot of the founders that I mentor or work with. If you don't want that type of pressure, which I don't suggest to everybody, right? I'm like, it's a very particular lifestyle and it's very aggressive and they will push you because they're on your board. You know what I mean? You're a lot of times people start businesses because they want to be their own boss, right? But then they raise money and then they have like 15 bosses yelling at them worse than any other boss you've ever had. And so it's a very particular type of lifestyle, which if you have it in you, right, you have to have that like real grind. You have it in you to report to those people, to work that hard, to scale at a level that frankly is like almost unrealistic, right? Tripling every year. And then exit for like $10 billion, go right ahead, you know? But if you don't, there's so many other options and there's so much cheaper capital that requires that's less intensive, right? So a few things about venture capitalists that sometimes people don't know. They generally look for minimum 10x returns. So if they give you $1 million, they want to see 10 million. And so how you make that happen is your prerogative, but they're going to push you for the 10 million. Sometimes it's not. Sometimes they get a board team to start making decisions for the company if it's not going well, right? But they generally want 10x returns. They used to look for unicorns. You probably all heard that term. They don't care about unicorns anymore. Now they want decacorns. A unicorn used to be a company that was $1 billion. Now they look for $10 billion companies. So what that means is a minimum 100 million annual revenue. And usually they like recurring. So that's a lot of money and they want to cash out in less than 10 years. So they want 10x in 10 years. That's the deal, right? And so think about 10 years. I know it's a decade, but like in terms of a company, like that is a very short period of time. And so it's very intense. Now, if you do think it's right for you, I will go a little bit into how they make that process because that helps refine your pitch. So the way venture capitalists work is, like I said, they come together as a group. There are solo GPs, but generally there's a general partner and then a bunch of other partners or managing directors, right? They come together and they form this group. They usually put a little bit of money. Sometimes they raise from other people as well, externally. A lot of times they raise externally. And then they go and they decide a thesis. Their thesis is how they invest, right? So my fund, we were B2B SaaS. We only invest in business to business, preferably enterprise, software as a subscription. Very specific, like even down to the business model, right? Industry agnostic, so we didn't care if you were in finance or if you were in HR, health tech, whatever, as long as your business model was B2B SaaS. Some people are very specific, only female founders, diversity. Some people want, there's these new funds, they do like sci-fi tech. So anything that's like what we saw today, the AI it was really cool, right? That's why they were the people's favorite. Yeah, so they all have like different theses, but it's usually based on the companies that they exited or companies they're familiar with, right? So they'll be like, oh, we all exited financial services. So let's go and invest in the new financial services up and coming companies because that's how they can help you. So they're usually very specific. Sometimes they're agnostic. Agnostic means they don't care. They'll look at every single company that comes their way. And then second, they're usually very specific on stage. So you guys know pre-seed, seed, late stage, right? Yeah. I don't have to go into that. So usually they have a stage preference. So they'll say we only invest in companies that are pre-product and we'll only give $50,000. Or we invest in companies that have already raised 5 million and their revenue is between 10 and 20 million. Like they usually have a very particular stage, and they will also have particular allocation needs. So what that means is they'll say, hey, we don't invest in a company unless you give us minimum 10%. or you give us between 5 and 10 and we get one board seat. Sometimes they're very strict about that. So the good thing is that usually it's on their website or the first conversation, ask them, like, what are your preferences? What's your hard line? Because usually they have hard line. This is exactly what we do. And then what are your preferences? And they'll tell you, they'll say, well, we're agnostic. We invest in everything, but our preferences are fintech, AI, and supply chain. And then you're like, okay, well, I'm outside of that. So are you interested in that? Well, yeah, but nobody has expertise.
Does foundations fall in the same category?
No, I think foundations would fall under family offices. But they can be as sophisticated as VCs. So what I'm saying does sometimes apply. So yeah, they can be very specific. So I actually prefer the specific funds because the specific funds, you know exactly what they invest in. A lot of times they'll tell you, we invest in everything. And they'll meet with you a bunch of times, waste your time. And then they'll come back and say, you know what, we actually don't have any expertise in this area. So we're not going to invest because we don't understand the space. And then you're like, oh, well, okay. You knew that at the beginning. Kind of like recruiting. And they're like, you don't have enough experience. You saw my resume day one. So, there's some frustrating parts. But yeah, so sometimes they're very specific. Sometimes they're very broad. So now we understand like their thesis. The way that they work is usually you'll have a first meeting, either with an associate, principal, or a partner. If you have it with a partner, great, you're already step 2. Sometimes if you have like personal connections, you can get a partner intro first. But usually your first meeting will be with an associate. This is some kid that has like 1 year of experience that thinks they know everything. No, I'm kidding. It'll usually be somebody that is interested in the space, but doesn't have a lot of experience. So sometimes it can be a very frustrating call because they don't really understand the space. And so you have to spell everything out for them. Be as detailed as possible. Because what happens is they take notes on that call. And then they go to the partner that they work under and they have to pitch your company to the partner. If the partner rips them to shred, which they do all the time, right? You didn't ask this question. You don't know this, you don't know that. They're not going to look at your company. So you have to hope that's a good associate and they're going to get your deal across. Important point. This is more often in venture capital because this is how they're structured, but I'm sure some family offices are similar, but mostly family offices have like less people. So anyways, you pitch to the associate. The associate takes all these notes. They do some research on your industry. They look at your deck. They look at the references that you have. They do extra research. They call people that they know, maybe other founders that the fund invested in that's in your space. And they ask, hey, what do you think about this company? Or what do you think about this space? Do you think it's growing or is it shrinking? Is this technology feasible or is it not? Right? So they'll do references already. If they think it's good, they have to sign their name as an associate. Think about that, how scared you are, right? First 2 years on the job, you have to sign your name on it and say, I believe in this company. And then the partner is going to rip them to shreds. They have to really believe in you. So they have to like you, right? They got to like you. They got to like what you're selling. And you got to be convincing. And you have to give them all the necessary details to do well on that call with that partner. You want to set them up for success. Now, partners review it. They don't like you. Get out of here. I'm never talking to you. They like it. Set up a meeting. So if you get up, hey, there's a second meeting, it means that associate did a good job. Buy him a Starbucks next time you see him. You go to that partner call. Now, same thing. They're probably going to ask you the exact same questions. It's going to be annoying. They'll also ask you questions that they didn't understand from the associate, right? Maybe they have more. Their partners, they're generally like have 20 years of experience already. Probably the partner that you're getting sent to is somebody that's from your industry. So they're going to be like, all right, I know everything about this. Or maybe they invest in another company like you. So they're coming in with a lot of knowledge. They're going to grill you. The partner call is very intense. You do the partner call. Now, that partner does the same process the associate just did. They take notes. They do a little bit of research. They call their buddies. They find out, is this a good company? What do you think about this space? What do you think about this? Well, I invested in a company that's similar. They didn't do well because of this. What do you think? Okay, And then that partner has to go to all the other partners in the fund and pitch you. And in that meeting, it's called investment committee. Every partner is bringing their deals. So it's like kind of like a little war zone, right? They're like fighting to push their deal forward because also it looks good. Like at the end of the year, you pull your data for the fund. You say, oh, this partner actually had the highest number of investments. This partner, so you are a trophy for them, right? Like they want to bring in the best companies. So be their partner, right? Give them all the information they need, be convincing. There's a question that always gets asked in investment committee, and this is where most startups fail. You know, they pitch whatever, the partner pitches the other partners, or the associate pitches the partner, and they say, yeah, they're doing this thing, it's kind of cool, da da da. I love the space, I love the product, I love the market, it's so cool. And then they'll get asked, do you have enough conviction? Conviction. Are you convinced that this person is going to make it out of everybody else you've spoken to? That person. Are they a great founder? Do you think they're better than everybody else? Do you think whatever? And it's a tough question to answer because you don't know. Like, you know, you met this person for an hour meeting. You don't know. How can you have that much conviction, you know? And they have to put their name on the line. So they have to say, yes, me, Faye, I'm convinced that person's going to make it. Like that is where there's the drop off, right? Because like, how are you going to get this person that just met you for like 30 minutes, 60 minutes to go to a bunch of people that are super smart and exited these companies, lots of experience, and tell them, yeah, this person's going to make it over the thousands of people we met this year. Tough, huh? So if they say yes, they vote. And then they vote. And, you know, sometimes it doesn't go through just because the other people are like, it can be random. It can be like, we made too many health investments this year. I don't want any more health tech companies. And then they vote no on your company, right? It could be as little as that, or it could be a heated discussion. Sometimes, a lot of times they like to get heated. They got a lot of time, you know? Yeah, absolutely. And that's another thing. A lot of funds, they track the no's. And if a no makes it, and you're the person that turned it down or didn't bring it to the committee, also looks bad on you. So it's very political. I don't know if people realize how political the investing game is. Even angel groups, 48 people. You want to be the smartest, right? You want to be the smartest that brought the best deals. That it's always like, there's always like a little bit of ego, a little bit of like, you know, it's high risk investing. Like everybody knows 98% of these investments aren't going to go to anything. Like I'm losing my money, but you want to get that one deal that's going to make you all the money. So anyways, I talk about this to explain the value, right? These are the things that they care about. People think it's just cash, 10x return. It's not. It's political. It's reputational. They want you to be the company that makes it so they can say, I believed in them from the beginning. I was there. I was so smart. I picked up that deal, right? And you want to be that person for them. So think about that when you're pitching. You're not just pitching a great market or a great idea or a good team. You're also pitching their career. You're saying, I'm going to make your career. You bet on me, I'm going to make you all that money. Everybody's going to talk about this fund. That's pretty cool. Okay, positioning. So we talked about value. You guys understood that. That helps you frame your position a little bit more, right? Where you're like, okay, it's not just about, you know, talking about my business, not just about the industry or the recession upcoming or all these things. So much more than that. It's very personal, actually, right? That's actually all of sales. Okay, so positioning. So now that you know who your investor is, you know what they care about, you understand them at their core, you can create your pitch in a way that caters perfectly to this audience, right? A few questions to look over. I would recommend like you think about these questions every time you think about positioning. What information does this investor care about? We kind of just talked about it, right? They want to know your returns. They want to know that you're going to make them look good in front of their buddies. How do I present this information in a way that's appealing and compelling? How do you get that conviction? Is this, you know, I actually used to work for a VC that was both in Canada and the US. And it was funny because we said you had to make it different for Canadians, East Coast VCs and West Coast VCs. They're all different. We're like Canadians, realistic. Canada is built, oh, you're Canadian. Yeah, you know, Canada is built on what? Agriculture, financial services, and I think that's it. Agriculture, financial services. Wood, exactly. Exactly, very old school industries. Yeah. Marijuana now, as of 2017. So if you think about Canadians, like because of their industry, they're very realistic, right? They're very realistic. Here, tell me exactly what's going to happen. Tell me this. They don't like showmanship. So for anybody pitching to Canadian VC, we're like, hey, tone it down. Don't do it. Don't be flashy. Realistic numbers, data, graphs. Those are Canadians. East Coast, aggressive, fast talkers. New York, You know, like they want you to be quick with it. Yeah. They want you to like be passionate and aggressive and like hardcore, right? California, it's a show, baby. Like show business, Hollywood. Like you have to present, like, I'm going to make you the richest VC in the world, right? And I'm not saying like that's an overgeneralization, obviously. Like every individual is different. But generally, like that's what we would tell them. We would say, hey, if you're pitching to Canadian, don't go there with your 10 billion TAM. They're not going to believe you. They're just not. They're going to say, yeah, I see that. And I Googled it. And I see that. But I just don't think it's realistic. They're very, similar to Europeans, pessimistic, right? Americans, very optimistic. Like, oh my God, it's possible. Everyone can make it. And so you got to put on a show. So how do you make it appealing, compelling to that person? Like, don't be so much that you're going to turn them off if they're more conservative, or turn it up a notch if you know that they're very outgoing and charismatic. How do I make this pitch memorable? Think about it. These associates, especially the associates. I was an associate for 6 months. I couldn't cut it. 10 meetings a day, 10 meetings back to back. I don't even have time to like take a bio break or get water or get coffee, like back to back to back all day. And I have to remember you. And most of them are on Zoom. And it's, I zone out. I'm checking my email because my boss is yelling at me about, it's very intense. So how do you make sure they remember you? How do you make sure you're engaging? And sometimes it's just not possible. Sometimes they're having a bad day. Their email's blowing up. They're about to get fired, whatever. You never know. But try as much as you can to be as appealing as possible, especially in a Zoom world. It's hard. So you're 2D. They have a double screen. They're watching a TV show on the other side. So, but for associates, they're younger. So think of it that way. Like you want them to look good for their boss. So you present it in a way to them that they know, they're going to get a promotion because of this company. So that happens. Company does really well. Hey, you killed it, man. How do they like to absorb information? Are they visual? Do they want a deck? My favorite founders, 10 meetings a day for 6 months. My favorite founders were the ones that started by saying, how do you want to do this? Do you want a deck or do you want a conversation? And I was like, oh, thank God, I'm having a rough day. Can we just have a conversation? Like, tell me. And then, that makes it very personal. A lot of times you'll get VCs that are very associates that, this is the career path they wanted. So they're like, run me through your deck. Give me your straight 10-minute pitch. And then it's like, all right, this is what I practiced. Do they like written? Ask them that at the end as well. Be like, hey, would it be helpful if I send you a one pager? Would it be helpful if I sent you a memo? Because that's what they have to do, right? They have to write up a memo. What if you wrote one up and sent it to them? What's a memo? One pager or a memo. It's in VC, it's called memo. Oh, one pager is usually like one page on your company, like a nice little executive summary. A memo is an analysis of risk. So that's what they have to write. They view every investment as what are the different risks? What's the founder risk, product risk, market risk? And they write it all out. They do research, they figure it out so that they can invest in like the least risky thing. So sometimes they like that. They want you to send it to them because then you had done a lot of the research, and they literally go through your links at the bottom, the references, and they'll check all those. So if you can do the work for them, make it easier, they're going to remember you. They're going to like you. You did the work for them, and you take away the potential of miscommunication because it's your words on the paper. So if they copy it, which is what you're hoping for, they'll present it in a way that is exactly how you want it to be presented. Yeah. Oh, yeah. Yeah, for sure. Yeah, no worries. What concerns will they have? Like I just said, investments are risky. Startups are the highest risk investments you can make. They can go and they can buy a house. Actually, isn't it like Warren Buffett said his best investment to date, his second best investment was his house? Because he bought like a $200,000 house and now it's like 1.5 million or something in Tulsa. That's what I hope happens. I just bought a house in Vegas. So they're looking at it from, they know it's high risk. They know it's high risk. If you show up and say there's nothing wrong with my company, you're lying. There's not a single company without problems. So if they see that you understand your risks and you have a plan to address those risks, perfection. You go up and you say, hey, look, this is what I got right. I got customers. This is how sorry, I'm a little tired. This is the problem that I figured out. This is the solution. This is what I think is going to solve the solution. I talked to 1,000 people. They all agree that this, 90% agree that this is a solution. So I've done the work. The hard part is going to be building it. Here's what I'm struggling with right now. Finding a facility that makes sense. hiring the right team, right? Tell them that and say, so not only am I looking for capital, I'm also looking for advice. Are you going to be able to help me hire people? Are you going to be able to help me find a manufacturing facility? Turn the risk around and say, that's the type of help I'm looking for. And all of a sudden you're interviewing them, right? That's happened a few times where I'm like leaving a conversation. I'm like, oh, who's running that call? You're asking me all these questions. And it's a very, it's a psychological thing, right? When you turn around the power dynamic and say, look, I can take money from anywhere. There's money free flowing right now. Why am I going to take it from you? How are you going to help me? These are the problems I'm facing right now. I'm not scared of sharing my problems. Every startup has problems. These are my problems. I want partners that are strategic that can help me solve them. Cool. Like you turned it around. They're going to go to their partners. And when their partners say, what about this? Like, yeah, they actually brought that up. They said that's one of their problems. And they're looking for a strategic partner to help them. Do we have the expertise on the team? Is there any way we can hire a consultant to help? Because if we make this investment, we should help them, right? And so it changes the conversation. So yeah, what concerns will they have? Like what types of risks is in your company? You know, maybe your valuation is too high. Like think about the things that they'll bring up. And after you have a few meetings, you'll start to hear similar things, right? Keep a notepad of all the objections that you get. And then as you go over them, like think of really good justifications, ways to turn it around. How do I address it in a way that shows my understanding of the risk and my plans to hedge it, right? I just said that. I'm so ahead of my deck. Can I say things? And I'm like, oh, I wrote that down. Good for me. Built a good deck. Am I convincing? Yeah, okay. So final slide. I'm not gonna go in depth into everything, but this is my favorite deck structure. Everybody's will be slightly different. This is not gonna be perfect for everybody. So don't take this as like the way to go. But my favorite way to do it is think about it logically. What is the next question the person's gonna ask? And that should be your next slide. That's my favorite way to present because it's like, you don't want them to have that question in their mind the entire time. And then they don't pay attention to the rest of your slides. Because that's what happens a lot of times, right? They're like, I don't know, I don't think that's gonna work, right? And then that's all they're thinking about. So my favorite deck structure is 1, company mission. A lot of people don't do this, but I think it's so important. Like 1 line, who are you and why it matters? You know, my company is a water bottle company because it's hot in Vegas and people need water, right? I know you also frame them, right? Even if it's not like a mission-driven company, your mission gets the investor in the frame of mind. So if you show up and say, I'm doing supply chain for e-commerce for indie beauty brands. In my head, I'm like, okay, all right. I know a little bit about beauty. I invest in 2 beauty companies. So I'm already thinking about the industry. That is a good industry, high margins, That's my first thing that I'm thinking. What do I know about this industry? Because my first few questions are going to be about the industry if I don't know enough. But if I do, I'm like, all right, done. So you've put me in the right frame of mind to have a conversation about what you do. So it doesn't have to be specific one-liner, right? Here's what the company does. And if it's mission-driven, even better, right? Because you get people in that frame of mind of like, okay, we're helping people. 2, what's the problem? If you don't understand the problem inside and out, there's no business. People talk about this all the time. Be obsessed with the problem, not the solution. If you build a product and then try to find people to sell it to, good luck, uphill battle. But if you ask 1,000 people, sorry, I know the jewelry, but everybody loved it. So I think you do have a problem. And you know, when I say problem, I don't mean like an infomercial, like, are you struggling with your wires? No, it can be, I don't find fashion that makes sense for me. I don't think, you know, I want to be more individual in the way that I dress, right? It could be anything. I can't wear jewelry when I'm working out, which is big, right? You go to the gym, everybody's wearing those like rubber wedding bands. I'm like, just take it off. Yes. Like, it's not that serious. Anyway, so problem, right? What is a problem? Like, what is it that people are not getting today that they can get with your products, right? Stress that. And then here, talk about how you found out the problem. If it's a personal story, share it then. Amazing. I love it when it starts with a personal story because you're automatically connecting with the other person. Okay. Talk about the problem, like real problem, like that either personal story and combined with the research that you've done. You know, I think last time there was like a healthcare person on here that said I had a experience where the healthcare system was really crappy. And so I want to fix that because I don't think anyone should go through that again. I love that when I heard that last time. So then that person needs to go and say, and then I talked to 1,000 people and they all had the same experience. So you're saying, I had the problem, so I understand it personally. Talk to a bunch of people. They all say the same thing. So we got to solve this problem. Next slide, solution. Here's what I think we should do. We should build an app that makes it easier for you to control your own data in the healthcare system. Clear cut, right? The important thing is at the early stage that you guys are at, investors are not going to give you money for your product because your product is very early, probably doesn't even exist, right? They're giving you money because they know that you understand the problem deeply. So, I mean, somebody told me,
I do, that's absolutely true.
yeah, somebody told me the other day, I met an investor. He's part of an angel group called Pasadena Angels. They're one of the largest and oldest angel groups in America. And I met him and he said, I did a talk similar to this. And I said, be obsessed with the problem. He emailed me after. He said, I'm part of this angel group and I wanted to give you a data point for the next time you present. He said, we've made, I forget the number, but we've made like 200 investments and 185 are completely different than the product we invested in. Completely different products. He's like 185. He's like, that's like 90%. He's like, we want you to evolve your product. We don't want the same crappy product you gave us in the presentation. We want an evolution, right? We want, hey, you know what? We've been doing this for 2 years. Found out people don't like that. People actually, it was called, it was another problem that we didn't realize. And this is what the solution should be, right? It's like an evolution and like you're open to the feedback and you're changing for those customers that are facing that problem. So be obsessed with the problem. Solution, present it. Obviously, they want to know what your product is or what you're planning on building, but focus more on the problem. D, why now? Why hasn't somebody done this before? Is it going to work now? Because you hear a lot about these companies that are very high tech. They come out with a product and it was too early. It didn't make any sense. Remember QR codes? They came out like 12, 15 years ago. Nobody ever used them. And then COVID, oh my God, we need contactless. QR codes came back. So the first person that built it probably stopped you like, oh, I lost all my money. And now he's probably like, that happens all the time. Microchip companies, they built a microchip before it could slide in anywhere. Like, what's the use of this? None of the laptops can hold microchips at the time. There's no laptops. So people invent things for the wrong time. So investors aren't going to want it if there's no market trends. So prove the market trend. The reason it's happening right now is because, an easy example that I'll give you guys, COVID. The reason this matters now, like a lot of people are pitching community stuff. The reason we need community now is because everybody's, been isolated for so long and they want to get back out there and they want to connect. So that's super important. Think about why now. That, like, if you don't have an answer to that, that's like a huge part of your pitch. So really focus on like why that matters now. Market sizing, I'm sure you guys have done a talk on this. TAM, SOM, I forget the acronyms, but TAM. Team, they want to know you guys are the right team. Like I said, they're investing in the problem, the market, and you, right? If they're not convinced on you, they don't think, whatever, you're the right founder, like you don't have the right experience or you're not passionate enough or whatever, they're not going to invest. So you have to do a really good job in the pitch to convince them you're the right person. Traction, financials, if you have any, you guys might all be too early for any of that. But if you don't have any revenue, really good traction to put in there is like the customer interviews that you've done. Say, hey, I haven't sold anything, but I've talked to 1,000 people, 80% love it, 60% say that they buy it for the price that I'm deciding. Yeah, early data, that's like a really good one now for websites and tech companies is waitlists. Waitlist, yeah, go on your website, a waitlist on your website. So have a website and say, hey, here's this beautiful thing. Do you want it? And then sign up your email. And then when we launch, we'll email you to buy it. There's this really cool company I just learned about. I read it. I watched an interview by the founder. It's called Brumate, Brumate, Brumate. I think he's based out of somewhere here in the Southwest. It's kind of like a koozie company. It's like do you guys know those water bottles? Oh, I have one. These water bottles, insulated water bottles everybody has. He makes them in the shape of a beer can, so you can slide your beer can in. And then you can also pour the beer in it if you want to take it to go, which sounds so like, I was like, all right, whatever. Yeah, he launched it 5-6 years ago, something like that. He's now at 36 million a year on beer insulation, guys. But now he makes all shapes. He makes like one that looks like a wine bottle and you can pour out a whole wine bottle in it. Like he's literally selling drinking in public. Public intoxication. And he's making 36 million. I'm like, good for him. And they make little martini glass ones, little insulated martini glasses. And most of his sales are like gifts, right? It's during Christmas time or whatever. But he talked to 1,000 people before he produced anything. He had a wait list of 30,000 people, 3,000 before he launched. So I'm like, 3,000 people. Brumate, Brumate. And one of them has like, like the German 2 dots or startup. Check it out. It's like, yeah, he's crushing it. So I say that to say, yeah, when he first started, he was like, all right, I'm not going to produce anything until I talk to people. He bought Facebook ads and Instagram ads, and he designed it virtually and posted it as if it was selling. And then people would click in, and then he'd say, sorry, you're not available yet. Coming in a few months, give me your email. But he counted the number of clicks. He said, that's the same number of clicks I would have gotten if I had the product. That's a traction point. If you say I showed it to 10,000 people on Facebook and 5,000 clicked, huge click-through rate, right? You don't have to have the product. And then he also collected emails. So he said, not only did I get click-through rates, I also got 3,000 of those people to sign up for my wait list. So when I launch, 3,000 people that already saw the product, that love it, that said, yes, I want this now, are going to buy. I mean, I'm sure not all of them will buy, but like he's building a funnel before he has anything. Amazing. So for you guys so early, like there are so many ways that you can prove traction, prove that this is a real problem without ever having spent a penny on production or development or whatever. Competition, obviously very important. I'm sure you guys have a session on that, competition analysis. No, just Google it, competition analysis. And then your fundraising ask, right? How much do you want, your valuation? This is also very tricky. Sometimes people say hide your valuation so it can be like a conversation. You know what I mean? Like you don't want to say like your valuation's too high and then they say no just because your valuation's too high, you don't even get the meeting, or your valuation's too low and they take advantage and they would have offered you more to begin with. So there's a whole strategy about fundraising ask. That's a whole other like thing, but obviously important to put on there how much you're raising and how much of your company you're willing to give away, right? Because like you're not going to give away 50% of your company on your first fundraise. So they just want to know stuff like that. So this is my favorite framework for slides. This is what I use whenever I'm working with startups. But it's going to be different for everybody. One very particular example is if you have a very technical product, very difficult to use, like the AI one that was pitching today, you probably want to have 2 slides for solution, one with like details on like how it's built or something to prove your moat, right? Like it's hard to replicate or whatever. And also if you're pitching to a technical person, like engineers to engineers, I've been on calls with 2 engineers. I'm like, all right, take it away, guys. They like to get pretty deep into it. And that's it.
Any questions?
So I'm trying to go through an MLS for the licensing. And one of the things that they're asking for, where it asks for the financial documents, you have to upload something. So it says for like startups, you can do a statement, like not a financial statement, but you could submit something in place of a statement.
Like a bank, like your bank account statement?
But basically just like a generalized, like where your business is at, you know, like I'm not helping you. What they would be looking for or how that would do that, because it's not like a
And what is it for again? Licensing?
license.
Huh. I think if it's for licensing, if you submit the wrong thing, they'll just reach back out to you. So just submit anything.
Well, so I called their help desk to ask
Yeah.
her, and then she like went into this like 10-15 minute conversation about like all these other things and never even answered my questions. So then when I got done, I was like, wait.
You just call back, get somebody else. Yeah, that's what I do. I'm like, thanks, you've been so helpful. Oh, wait, let me answer the question. Sorry, CW. Okay, next week is the finale and I'm nervous. Any advice? Yeah, you're just gonna have to do it.
Yes.
The nerves will always kind of be there, and that's good because you're doing something that is outside of your comfort zone. And it's important to keep doing stuff like that. But the more that you practice, the better you'll be comfortable with it. And honestly, there should come a point where you're so excited to share your story because you've rehearsed so much and you are so passionate about what you're doing that you're just going to come up here and like, yeah, there'll be butterflies, but you will just be excited to wow everybody because you believe in what you're doing. You want everyone to hear it and everyone to support you. So I'll be here. I'll support you and nothing to worry about. Is there like a judging panel or are they going to get like,
Feedback.
Oh, no, I'm kidding.
We're going to have some people from Startup NV here that have been involved in a lot of like the Angel NV 1, 2, and 3 funds that have watched the evolution of, people's pitches and have mentored, which you should come, Faye. So you're going to have people here. You're going to get people here that will be able to provide you feedback. So not really any judging, more, okay, here's what we suggest, maybe try this. So yeah, it'll be a great,
Just friends.
just
No,
friends,
gotta
but just know that, we're here to give you guys feedback. Okay, I think we are done for today. Thanks everybody online.